Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 10th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with some of my market analysis. I'm doing the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about the option strategies that I'm implementing into my portfolio based on those assumptions I come up with through my market analysis. For you all, I've gone even a little bit further. Over the 25 years of my trading options, I've streamlined the process for you all to follow a roadmap in order to find the optimal option strategy for any given assumption. We aren't just picking option strategies out of the hat. What we are doing is looking at this underlying and following a roadmap to finding the best option strategy for what's going on around that specific underlying you are looking at for a directional move. So please check those out at protraderstrategies.com. The roadmap to trading options is what we're currently doing. You can check out my whole library of videos if you want as well. All right, let's talk about the economic data because we can see how they're impacting the markets already. Across the pond, we got the French industrial production coming in at negative 0.8%, expected to be a positive 0.4%. Remember, France, Germany, the major areas of manufacturing in the European region. One thing that we did note is that the French industrial production did get revised up by 0.2%, not quite making up for the 0.4% we missed on the headline number. German final CPI, Consumer Price Index, coming in line with expectations at 0.1%. Now moving here to the United States, we got our own CPI, which came in at 0.3% in line with expectations, but when you strip out food and energy, that number came in unchanged, expected to be a positive 0.2. So not really seeing consumer inflation at this point, despite the fact that we're seeing crude oil move higher here. That would have driven up the regular CPI because remember, stripping out food and energy, that energy aspect here not showing up in that number. Finally, or actually, no, we got final wholesale inventories coming in at 0.3% higher than the expected 0.1%. Of course, we like to see businesses moving inventory, not building inventory. And crude oil inventory is a big drawdown of 6.6 million barrels or 6,600,000 barrels, expected to be a drawdown of only 900,000 barrels, just shy of 1 million there, but missing on that headline number by over 5.5 million barrels there of a drawdown. Now, what we've been seeing is production hasn't slowed down. Well, we haven't seen production slow down at all yet. Averaging 11 million barrels per day in production. That's up $100,000 or 100,000 barrels per day from last reading. Another thing to note is gasoline was a build of 4,250,000 barrels over what was expected. There was a drawdown in distillates of 1,730,000 barrels. So production moving this into different buckets. The only one we're really seeing get overfilled is that gasoline, where those inventories are really starting to rise. We're not seeing those get drawn down at all. Distillates, good thing. Seeing a drawdown there. Why? Maybe the manufacturing process is starting to pick up and those inputs are needed for that process. So distillates, a drawdown would signify that there is some demand going on there because production of the refining process is ramping up continuously here. All right. Crude oil starting to move higher here. I would not be surprised to see a 60 handle here very shortly, especially after, in the next few days, I should say, especially after another big drawdown in crude oil. Gold futures trying to make a move here. We talked about this with Bitcoin yesterday. Gold futures are trying to move higher. We were talking about what is the new flight to safety. Well, it's not Bitcoin today. We were seeing Bitcoin really fall out of bed. So they aren't flying to that. There are still trying to do the Reddit pumps. Now it's on to the cannabis stocks. Tilray is one of the biggest ones. we can talk about here in a little bit maybe. I'm not involved in any of those pump and dump stocks, to be quite honest. I'm going to stay away from them. Bonds just slightly higher on the day. Looks like we're finding a little bit of a bottom here. We are still consistently seeing lower highs, lower lows. That is a very bearish trend here, and we would have a lot of work to crawl out of this downward trending spiral, it feels like, in bonds. VIX moving higher. The rest of the broader markets are struggling to rally today. Yeah, we are seeing the Dow Jones in positive territory, but not too long ago we were seeing pretty much everybody in negative territory. Climbing off of the lows here in the NASDAQ, only down 60 points, but you can see well off, or off the lows, but been a big struggle for the better part of the day. You can see the E-mini S&P is pretty much unchanged on the day. Daytime did not get that print in the highs. As soon as we opened up, the market really just started seeing some strong selling going on. I think that this is more a case of, well, we have China and Japan having a holiday, or at least a bank holiday. Now, China and Japan, we're seeing those markets do very good in our overnight sessions. That was continuing on today, but our markets showing some weakness as the volumes are more than likely to be a little bit lighter than normal. Now, I told you guys I was looking to play this trade out where I was going to take a stab at a bullish move in TLT. So with that being said, I was able to get in here on the 153 calls that I was talking about. Got filled pretty close to right after I got done shooting the video. As a matter of fact, when I was doing some editing, I threw in there that I had gotten filled yesterday while I was doing that editing. So I threw a little note in there. Hopefully everybody caught that. But in the May, I bought the 153 calls in there for $295. I did it small, but I am looking for an upward move here in bonds to break that downward spiral trend that we've been seeing and interest rates continuously rising. I think that we're going to see a little bit of a reversal here in the long-term treasuries, and that should signal that interest rates should go down just a little bit. But all of that's going to be a lot of data dependent going on right now, as we'll start shortly seeing some of these manufacturing numbers and things of that nature. See if that's really where that drawdown is coming from in the distillates over there. So, like I said, May 153 calls. I am long in TLT. Twitter, I played this to the downside, but the market did spike. Something I do love is the fact that you can make money in options when you are completely wrong. And this was a case in point. In the February, I sold these 75 calls in there for 65 cents. You can see I did come very close right off the open, came up and tested that 70 handle. Said that Trump leaving did not diminish their user engagements really, and they are not too concerned about that going forward. Market really took off to the upside based on that. But anyway, I sold those February weeklies that expire tomorrow for 65 cents. 75 calls I sold for 65 cents, bought them back this morning for 33 on the sell-off. You probably get out better than I did. As a matter of fact, I got out almost immediately. I put that trade in before the open for a right around a 50% of max profit because of the market moving in my direction. I didn't want to play around too much with that one, or against my direction. My direction was bearish, to be clear. All right, and that's it. I did TLT today. Twitter, I got out of my earnings trade, starting to see a little bit of a bounce here, but it was up over 10% earlier this morning. So Twitter making some moves to the upside. Like I said, I'm out of that though. Added some TLT to the upside. I need to have some of those hedges in my portfolio. We're at all-time highs in the equities, and it feels like they are getting a little bit toppy, especially on these morning sell-offs and stuff like that. So I think I'm pretty hedged. Like the way my position or my portfolio is set up right now. So other than that, I'm going to be sticking to earnings trades. And with that being said, what is today? The 10th. After the close, we've got I think Under Armour already came out. I think I saw that already. But MGM after the close, we've also got Kroger, tomorrow morning, and a couple of other ones that we're going to keep our eyes out on. Kraft Heinz, I don't think I'm going to trade though. All right, that's it. That's all I got for you folks. Hope everybody takes a moment to go over our disclaimer. As we are an educational company, know your risks, know your rewards. That's all I got for you folks, other than if you can't take that, take it easy.